Moshe Lander is with us next on the show, senior lecturer in economics at Concordia University. Hey there, Moshe. How
Hello.
you doing?
I'm well, thanks.
Good. So is the price of gold. Prices per ounce are hitting these record level highs. We've been reporting on this, of course. Investors are looking for safe havens to put their money in the face of uncertainty. Let's start with the price of an ounce of gold right now. What is that in Canada?
It's about $4,000 US per troy ounce. So when you're measuring metals, we don't take the traditional pound and divide it into 16 ounces. We divide it into 12. $4,000 in Canadian money these days is around $5,600 Canadian. So these are record numbers. It's a little bit down from yesterday. But if you invested 6 months ago, you've made about 25%. If you invested a year ago, you've made about 55%. If you invested 20 years ago, you've made about 1,000%. Better than any stock market out there.
And so people are going to be listening, and right away you think, an ounce. So do I have an ounce in my house if I melt down my jewelry, or how does this all work?
Yeah, an ounce is surprisingly a large amount. I think that when I think of ounces, I'm always thinking in terms of how many ounces is my steak. But an ounce of gold is a pretty substantial amount. If grandma was telling you that that engagement ring is solid gold, I'd check very carefully. You don't want one of those antique roadshow moments where it turns out that it's just gold leaf on top of nickel and it's a buck 99 at the local Dollarama. But even if you have it, if you're going to sell it for $5,000, hey, $5,000 is great, especially these days. But that family heirloom is no longer in the family, and it's no longer an heirloom, and it can easily be melted into something else. So once it's gone, it's gone. Think really careful about, how you're stripping down your house and your motherboard on your computer and things like that to look for that gold.
What's your economist take on the attraction of gold, and also whether or not right now it is a safe haven investment in this uncertain time?
So gold is universal. You can go anywhere in the world and people are going to recognize gold as gold. The thing with Canadian money is that it's only money here in Canada. It's why when foreigners come and they look at our money, they make the joke that it's monopoly money. If you think about it, what makes that purple piece of paper twice as much as the blue piece of paper? It's just because we trust it. And so it doesn't have that universality. Gold has the added advantage too among a lot of the metals in that it doesn't corrode, it doesn't have an expiration date, it doesn't deteriorate. So that makes it a much better store of value than, say, maybe your money is. The thing with gold is that it's seen as that safe haven in times of economic or political uncertainty. And I think we could agree that the first quarter of this century has been almost continuous, one crisis after another, whether it's of an economics form or a political form. War, famine, type of thing drives people to safe havens, and gold has been that for centuries. And because it's universal, that store of value, it's what makes it much easier to go grab these days.
So before I ask you about the global economy and the impact there regarding gold, you just said, 55% year over year, I think was the number if you invested in gold, more than any other stock, I think was your language. So should people be thinking, really thinking about changing where they invest? Or is this always how gold performs? Well, it's not always how gold performs. It's record highs. But I guess, is it more stable, these increases we're seeing in gold than in the past?
Yeah, so gold is really volatile. So that's the thing is that if you don't have an actual expiration date and if you don't have a particular time frame when you need that money, it's probably good value. But that's the standard sort of risk and reward that in exchange for getting those fantastic rewards, there's a huge amount of risk with it. And so gold is much more volatile than the stock market itself. So that's the trade-off that you're encountering. If you have a long time horizon, then okay, you can probably do better than the stock market. But you're going to have to ride those ups and downs. And there's a lot of stomach churning moments there where that gold price can tank in a way that the stock market never would. And if the stock market were to tank, there's kind of an implicit understanding that would the central bank jump in to cut interest rates to help things out? Or would there be a bailout like we saw about 15, 20 years ago? I don't know that you're going to see any of that stuff if the gold price were to plummet. And so that's one of those things that you really have to have the stomach for it. If you're looking to get into the gold game, maybe better to look a little bit at buying gold shares. There's lots of companies on the TSX that are in the gold business. That might be the type of thing then where it's a little more liquid and you have a little bit more of an off ramp than actual gold itself.
And what about, if any, does the price of gold have? What effect, if any, rather, does the price of gold have on the global economy, just looking at the bigger picture?
Well, it depends on who you are. Are you a producer or a consumer? So in Canada, for example, we are the fourth largest producer of gold. I guess I shouldn't say producer, right? It's not like we're actually manufacturing the stuff; we're extracting it from the ground. But we are the fourth largest extractor, and we do it in a rather environmentally friendly way, as much as gold can be environmentally friendly in extracting it from the ground. So that's going to be very good for the Canadian economy, not just now, but also going forward, because we have this huge store of wealth that's underground. We're consumers of it. It's in the healthcare sector, the electronic sector, the technology sector. There's a good chance that your motherboard inside your computer has some element of gold in it, not enough to rip it apart, but it's there. So when the price of gold goes up, it's good for producers, but it's going to be bad for consumers because we're going to see that the price of our computers may be a little more expensive to cover that higher cost of gold that's embedded in it. A country like India, by contrast, is almost entirely consumer and not producer, and so it's going to work against them. So it's almost like this movement right now is benefiting the producers of gold at the expense of consumers, and it really just depends then on what your economy is made up of.
You were talking, Moshe, about going underground. I just want to remind listeners of something that was announced just in March of this year in Manitoba. So the government here announced that a new mine will create, they say, hundreds of jobs in the north. This is around Lynn Lake. So this is, they had a groundmaking ceremony. This is marking the beginning of construction there. This is for a new gold mine near that town. Is when you think about mining and gold and in our, what we have across Canada in terms of, gold deposits and such, where is it most plentiful? And when you see the impact on the economy and such, do the local economies beyond jobs and mining benefit? Because people might be looking at this and this saying, "Oh, here in Manitoba, a project."
Yeah, so the gold deposits are primarily in the north and in the west. So, like you said, in northern Manitoba, that would seem exactly the type of place that you would expect it to be. The way that it filters down to the local economy is a little more complicated, then, right? You said that there's going to be jobs created, but are those jobs going to be the locals, or are they going to be people that are being imported? So, in Alberta, where I'm traditionally based, right, we have a lot of people that are coming in from Newfoundland and Labrador to work a lot of the oil and gas installations up in the north of our province, and it's not necessarily the local population that's receiving the benefits. The spillover benefits, of course, are that as income is being earned, it's being spent, and so local businesses might get it as well. But the other thing that we've seen as well sometimes is that there's the potential risk for some of the chaos that comes with this rapid increase in economic development. If you don't have a lot of first responders and health and safety in place, sometimes those things can turn a little ugly. And if you don't have the proper response for it, and if you don't have the proper infrastructure in place to support it, it's the type of thing that doesn't show up in the economic data, but we know it's there as a social consequence of it. So it's something that needs to be factored in as well. It's great to have it in the ground, but do you have the infrastructure that's built around it to make sure that some of the benefits do go to the local economy, that locals are being trained to be able to have some of the jobs connected to it? And do you have people in place to make sure that everybody's going to live swimmingly? We don't have to look at even recent history. I think we've all done in Canadian history stories of the Yukon gold rush and some of the chaos that brought. That's not unique.
And we probably can compare it to when sites have been set up for big projects. I mean, I'm thinking about hydro development. This is going to be, by the way, 2 mine sites, a work camp projected to generate more than 600 construction jobs. But they're also going to be setting up, of course, places where people are going to be living. So to your point about what will the social impacts be? All right, lots to talk about and think about, Moshe. Thank you.
Anytime.
That's Moshe Lander with senior lecturer in economics at Concordia University with a look at gold.